I think part of it is the crypto industry doesn't have any leverage right now. It sort of delevered in October, and now when we have gold and silver doing so well, especially at the start of the year, that created FOMO, and that was like a vortex sucking all risk appetite towards the precious metals trade. So I think crypto has suffered from that on a price basis at a time when the fundamentals have been good. You know, it's been a contrast. There's a lot of uncertainty because of Washington picking winners and losers, and some of this could be the new Fed pick. But I'm also kind of heartened. I think gold and silver taking a breather is actually a good thing.
The central question confronting investors today is deceptively simple. Is the current market turbulence worse than expected, or merely a painful but logical extension of macro forces already in motion? According to Tom Lee, the answer is more complex than a simple yes or no. In several areas, particularly within crypto markets, the downturn has been more severe than anticipated. Yet beneath the surface volatility, the macroeconomic backdrop and underlying fundamentals suggest a market environment that is not broken, but deeply conflicted. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
Is this worse than you expected, or pretty much what you were thinking?
Well, and parts of it have been much worse. Like, you know how I think the crypto market has taken it much worse than we expected.
Why?
I think part of it is the crypto industry doesn't have any leverage right now. It sort of delevered in October, and now when we have gold and silver doing so well, especially at the start of the year, that created FOMO, and that was like a vortex sucking all risk appetite towards the precious metals trade. So I think crypto has suffered from that on a price basis at a time when the fundamentals have been good. You know, it's been a contrast. I think the broader economy is actually in good shape. So to me, the turmoil here is kind of what you said. There's a lot of uncertainty because of Washington picking winners and losers, and some of this could be the new Fed pick. But I'm also kind of heartened. I think gold and silver taking a breather is actually a good thing.
A breather. I mean, 80 on silver. That's not breathing yet. It's like I don't know what that is. You do point out that the consensus now is for the GOP to lose the House, and that is not necessarily a negative for the markets for the future because it's already consensus.
Yeah, I think it's consensus. It might actually be a positive surprise if the GOP keeps the House.
If that were to happen.
If that were to happen, but that's a big if. I think one of the things that we're seeing, of course, this year is the White House is deliberately picking more winners and losers early, I think, because of the midterms. In other words, their agenda is front-end loaded. I think that has caused some turmoil in markets.
Even if it was Hashrate, or I don't know who the markets would have liked, but you think no matter who it is, that the market tests the new chairman of the Fed when he's announced, or she is announced.
We saw that with Fed Chair Yellen and Fed Chair Powell, that in the early days the market tests them, whether it's their resolve around policy or rates. So I think the confirmation process creates a little uncertainty, and then I think the first FOMC meeting. So I think that's why the middle of the year could be quite bumpy.
Then you'd point out some things maybe to keep everyone a little bit grounded. Stocks were up the first 5 days of this year. Stocks are up 1% in January this year. Since 1950, that's happened about a little bit less, 36 times of 76 years, and the S&P was up 18% on average after a start like that. But I thought you said it. Someone recently said they don't even pay attention. I guess it was David Bond said they don't even pay attention to what happens in January. That indicator doesn't work. It's like the Super Bowl indicator. It's had its time and. You think it does? Historically, this is important.
Yeah, it's very telling. I mean, there's 36 times when it happened just exactly as you described. 33 to 36 times the market was up. The average gain's 18%. If you look at the non-36 instances, the other 34 or so, the market on average is down 5% for the year. So it makes a huge difference to do well in the first week and the first month.
A lot of this, obviously, the giveth and taketh away. AI went almost not like gold and silver, but kind of. I mean, asymptotic in a lot of those stocks, trillions of dollars of valuation. So that's going to be tough. That could be a headwind. Is that just, regresses, or do we use mean regression or reverse?
Yeah, mean reverts. Yeah.
Which do you like better? Reverse.
I could see both working.
I know. All right, so that could be a problem. So crypto doesn't have leverage right now. Is it going to go to the levels that you have talked about in the past still, or let's say 75,000 for Bitcoin? Is that a place where people would say, okay, I'm ready to buy, or is 40,000 a place where people say, I'm ready to buy?
Okay. I'm going to say something that it sounds a little contrarian, but Tom DeMark is our advisor at BitMine in terms of crypto. He's been since mid-November saying Bitcoin would go to 77 and Ethereum at 2,400. So he's been waiting for what he calls time and price to align. This weekend, he believes we reached that alignment. So all the pieces are in place for crypto to be bottoming right now because we're getting the level and enough time has passed. So I think as long as crypto fundamentals are good, which is the case, Ethereum active addresses is going parabolic right now, and activity. Part of it is, of course, Wall Street is building up digital assets and converging those businesses. If that's the case, then crypto prices should follow.
In sum, the current market environment is defined by contradiction. Crypto prices are weak despite improving fundamentals. Precious metals are strong amid economic resilience. Political and policy uncertainty dominate sentiment, even as historical patterns suggest constructive outcomes. According to Tom Lee, this is not a market broken by fundamentals, but one temporarily distorted by fear, rotation, and uncertainty.
One of the most important questions in Bitcoin right now is Bitcoin in a bear market? The reason why a lot of people are asking that is because they're trying to figure out what happened. We went up to $126,000, set a brand new all-time high, and then we came crashing down. We recently hit $75,000 in Bitcoin's price. That's a 40% decline. Obviously, that's got a lot of people shook. Now, if you've been around, you know that Bitcoin is likely to be very volatile. We have seen things like a 30% drawdown 4, 5, 6 times in bull markets. And so some people are saying, wait, we're actually not in a bear market. We simply are just seeing normal drawdowns as we continue to go higher, $150,000, $200,000, $250,000. I don't agree with those people. I think that Bitcoin is in a bear market, but it might be a different type of bear market than you're used to. So let me explain what are some of the things that I think are happening here. The first is that there's an entire cohort of people that subscribe to the 4-year cycle. This idea that the halving drives the price up, then there is some sort of correction. We then have these 80% drawdowns, and then we kind of repeat the process over and over again. It's happened multiple times in the past. These individuals continue to subscribe to this idea. Now, the reason why I think that the 4-year cycle is interesting is because I do believe that the halving has an impact on price. If you have a supply shock to an asset and demand stays constant, then you are likely to see higher prices. What I think is a little bit different, though, is that the 4-year cycle can remain, yet we can still have different severities in terms of the appreciation and the decrease in price. That is just volatility disappearing. And we know that Bitcoin used to be an 80 vol asset, but now it's only a 40 vol asset. And so if you've cut volatility in half, you should expect less on the upside and less on the downside. Now, another reason why I think that Bitcoin is likely to be in a bear market right now, other than just the price is down a lot, and the 4-year cycle folks are pretty well timed in calling the top last October, is that we also understand that Bitcoin is becoming financialized. Now, as Bitcoin has entered into the Wall Street world, what we are watching is all of these firms try to figure out, how do I take my type of strategy, apply it to Bitcoin where there's lots of volatility and lots of alpha, and extract economic value for me and my investors. We originally saw public companies adopting it with Strategy and others. We then saw the ETFs become very popular. Asset managers are simply saying, hey, I can take a 25 basis point fee on helping people buy Bitcoin, and then I can continue to take that year after year after year. So there was an economic incentive for them to do so. But now we're seeing things like covered call strategies that are going out as ETFs from those same asset managers. We also are seeing the introduction of other types of options into the market. And so now people can hedge. They can apply different types of pressure, both on the downside or upside of Bitcoin. The financialization of Bitcoin is going to temper volatility, in my opinion. And that's what we've been seeing, both in terms of the launches of these products and the adoption by the consumer, but also in the decreasing volatility. Now, the other thing that I think is really important here that people aren't talking about is I believe that markets are forward-looking. Actually, I would argue that that is just how markets operate. It doesn't matter what my opinion is. Markets try to look forward, and investors say, based on what I believe is going to happen, I want to act today rather than wait. So if you go back to 2020 and 2021, when people thought that there was going to be high inflation because of undisciplined government spending, what did they do? They said, I'm going to buy Bitcoin today. I'm going to buy gold today. I'm going to buy inflation hedges before the inflation shows up. I'm going to prepare my portfolio. And that was a really good decision. Stanley Druckenmiller, Paul Tudor Jones, and many others, along with everyday individuals, all were preparing for inflation that eventually came, but they bought the assets before. And so Bitcoin had run from 10,000 to 60,000 before high inflation ever showed up. And that is because markets are forward looking. Now, if you fast forward to just last year, we saw Bitcoin run up. When the Trump administration got elected, the price of Bitcoin was about $70K. That's $70,000 ran up to $126,000 in less than a year. And so there was a belief that, oh, wait a second, tariffs are coming. And if tariffs are going to actually get implemented, then there should be high inflation. If high inflation shows up, then this Bitcoin thing should serve as a great store of value and an inflation hedge. And therefore, the market repriced it higher. There was also the belief that the strategic Bitcoin reserve, a friendly government, many other factors could be a huge tailwind for Bitcoin. So it's not that Bitcoin didn't work. It's actually that Bitcoin did work. Bitcoin went up quite a bit in a very short period of time. But then in October, it peaked and it started to come down. And so one of the aspects that I think is happening is I think the market is looking forward and they realize that inflation is not going to be a problem. Instead, the bigger risk is deflation. And if deflation is going to be a problem, then your store of value assets, they actually lose value. And you don't have to worry about your inflation hedge. Instead, you've got to look for things that are productive and are able to actually benefit from that deflationary force. And so you could make a very strong argument, and I think I would make an argument, that one component of the reason why Bitcoin's price has gone down is because the market understands that the high inflation that we were promised is not coming. It is not going to be a problem for the next couple of years. And in fact, deflation may be a bigger risk. And so it's simply pricing in that scenario. I think that if that is true, which I believe it is, if that is true, then you can start to put together a couple of these factors. There is the 4-year cycle. There is the markets are forward looking. There's all these components that line up with why Bitcoin's price is going down. Now, on top of that, I have seen people online talk about mining hash rate falling. And there's always been this question as to, is mining hash rate the leading indicator for price, or is price the leading indicator for mining hash rate? Put aside that debate for a second. I'll let people smarter than me try to answer it. But what I do believe is that people need to dig into the data sometimes. And yes, there has been a significant decline in mining hash rate over the last 2 weeks. But a big reason why is because as the miners have become more sophisticated, specifically in North America, they have started to actually do demand response or try to stabilize grids. So when it gets really cold outside, the grid has lots more people pulling energy from it. They're turning on their heat. They're using electricity more. And so the miners have a decision. I can keep mining Bitcoin, or I can shut off my Bitcoin miners and I can provide power back into the grid and get paid for it. It's a simple economic calculation. If I'm going to get paid more by selling the power back into the grid rather than mining Bitcoin, I'm going to shut my machines off and I'm going to put it back into the grid. And so when we had this really big kind of Arctic storm that went across the United States, it affected huge areas of Bitcoin miners. And we saw a lot of miners start to report the fact that they were shutting off their machines and that they were going and putting the power back into the grid. That grid stabilization is a good narrative for Bitcoin miners because it means that they're being responsible kind of citizens and corporations in their local communities. But more importantly is it explains why Bitcoin's hash rate came down. And so I don't actually think the Bitcoin hash rate coming down has as big of an impact on price as people want it to be. But I think it's worth paying attention to. And obviously we want to avoid any sort of issue. That's why we have the Bitcoin kind of difficulty adjustment, many other aspects to make sure that we can continue to incentivize people to mine Bitcoin, keep the security of the network up.
Bitcoin today is not broken, nor has it lost its long-term relevance. What it has lost is its adolescence. The asset is maturing, integrating into global financial systems, and behaving more like a macro instrument than a speculative lottery ticket. Anthony Pompliano's message is not that investors should panic, nor that they should blindly buy dips. His argument is that Bitcoin is undergoing a structural transition. It may be in a bear market, but it is a different kind of bear market. One shaped by lower volatility, forward-looking pricing, financialization, and evolving macro risks.